Hello, everyone. Depending on whichever part of the world you're tuning in from, good morning, good afternoon, and good evening to you. I'm so glad and excited to welcome you to another promising and exciting session of the on the Extra Speed Live as we take a comprehensive price action based technical analysis on the financial assets on our watch list for this week. Now, before we kickstart the session, let's confirm that we are good to go this morning. And I would like to see some feedbacks as regards to the sound and the visual quality of this video. So let's see if you can see my screen clearly and hear my voice without distortion. Feel free to let me know in the comment section by typing in hi in the comment section. So your comments are indeed valuable to me. Let's see them roll in to confirm that we can kickstart the session. So I'd like to see some feedback, please. So I'm trying to load up my comment box. Let's see what we have here. Okay. All right. So I can see 539. Thank you very much. 256. Thank you. 140. Thank you very much. Genry, good morning. Thank you. 490. Hey, Carrie, good morning to you. Thank you very much. Susie MB, thank you, thank you, thank you. All right. So I will take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all to yet another promising session once again. And my name is Sheriff Daramola. And for the next 1 hour, I'm going to be your host when we shall be diving into the financial market to look at things from a technical standpoint. Well, I have conducted a comprehensive price action based technical analysis, and during the course of this session, I will be sharing with you my discoveries after this analysis. Our analysis will revolve around using simple technical setups to uncover potential ideas that could significantly impact our trading choices for today. We shall be exploring the historical price movement of the GBPUSD, the XAUUSD, USTech100, and of course the USOILSPOT, utilizing trend lines, key levels, and chart patterns to gain valuable insight into the current market's structure. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad and grateful to have newcomers in the house. So what we simply do here is to come together in anticipation of the New York's trading sessions. And during this time, we normally review and manage our current positions while also aiming to position ourselves strategically ahead of today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and trust me, the more time you spend with us, the better you become in understanding and utilizing the information you have gathered here to make your own independent trading decision. So with that being said, we are going to be going into the economic calendar. This is what we do on a daily basis. As we all know, these fundamental factors often manifest on the chart in technical patterns and, of course, price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And in fact, in the last 24 hours, it has been quite of a nosedive for the US dollar, especially after the Fed's announcement yesterday. It all came in just as expected. 25 basis point hike was what we witnessed, and in fact the dollar had dropped significantly in reaction to that event. So we are going to be looking at how we are going to be positioning ourselves for the later part of the week. So I have a couple of highlights coming in from the Fed announcement yesterday, which I also want us to be in know of. You can as well do your own research on the highlights for yesterday, but I came up with three. So the first one here is that Fed raised its key interest rate by 25 basis points. The target range for the Fed funds now stands at 5.25% and 5.50%. Then the Fed kept the option open for further interest rate hikes, so we are likely going to be seeing moderate hikes. And if you recall vividly, the event at Sinatra last month, where all the central bank governors convened, and the Fed chairman mentioned how there is still going to be 2 more rate hikes as at then. So we already have one now. So with the option open, we are likely going to see more of this rate hike before the end of the year. Then he also mentioned that we expect weaker economic and inflation data in the coming month, and therefore see the peak in key rates as having been reached. So he's expecting a weaker economic and inflation data to come in the coming weeks. And if that happens, then there might likely be a stall to the interest rate hike. So these are the key highlights from what he said yesterday, and you can as well do your own research to get more to help guide informed trading decision. So let's go into the economic calendar for today. So we have a couple of high impact events coming in from the US and Japanese economic docket. So the first one coming in from the US docket is coming in about an hour 30 minutes from now, and that is the gross domestic product annualized for Q2. And this is normally released by the US Bureau of Economic Analysis, and this data shows the monetary value of all goods and services and structures produced within the US economy during that Q2. And of course, the measure of market activities indicates the pace at which a country's economy is growing or decreasing. So generally speaking, a high reading is seen as something positive for the US dollar, while a low reading is seen as negative. Now, the previous data came in at 2%, and there is this general consensus that we are likely going to be seeing a 1.8% for today. So we are going to be looking forward to what the actual data is going to be for today, as majority think there has been a contraction in the economy. Then much more later in the day is the Tokyo Consumer Price Index coming in from the Japanese economic docket, and this data is the most significant way to measure changes in the purchasing trends and of course the inflationary status of that economy. Generally, a high reading is seen as positive, and from the data we have here, the previous data came in at 3.1, while the economists are projecting 2.8%, which is also on the lower side there. Then we also have the CPIX food, excluding food and energy too as well. So these are high impact event majority in the market will be looking forward to today, and in fact the anticipation of this event would reflect on the chart as price action. So with that being said here, let's dive right into the business for today. And as usual, the first financial asset on our watch list for today is going to be the USOILSPOT. Now, on the USOILSPOT, it's still been a very bullish outlook in this market as price action has continued to find higher highs and higher lows. And the fact that price action still remains above the ascending trend line we identified on the 1 hour time frame still gives much hope for buyers in this particular market. Now, I want us to quickly run through how the week started for us and what led to the idea of us buying the USOILSPOT. Now, looking at what happened at the beginning of the week, we saw initially the week opened with a bearish gap, as you will see here, giving us a clue, an insight into the institutional sentiment in this market during the course of the weekend. Now, in addition to that one, we saw this flat channel where price action was confined within the $77 level, and of course the $76.50 area to give us an insight into the level of indecision at this point in the market, and of course giving us a flat channel to work with. And with this situation here, you know how we do it. Whenever we have this kind of range, we want to wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, with the situation we had here, we saw the breakout of the resistance line happen, giving us our first buy position for the week, and we went on to add more position as soon as price action broke out of the $77.20 level. So with this situation here, we continue to ride the bullish move to the upside, and also remember, we added more positions at the breakout of the $78.50 and of course the breakout of the $79 area. So if you have been with us since the beginning of the week, you should be having a minimum of 4 positions running in profit on the US All Spot. So for those who are part of this profitable journey, well done to you for being on standby to have caught this move. Now, with the situation we have right here, it is very, very important that we move our stop losses to secure this current position. And in fact, I'm of the opinion that we want to be giving enough room for price action to breathe. So if we are going to be moving all stop losses on all buy positions, we should allow the stop losses to be anywhere between the $79 level and the $78.50 area, giving enough room. Let's see if the market might want to do some retracement to gather some momentum to push price further to the upside. So let's ensure that we have our stop losses secured within a wider range so that price could breathe enough. Now, with our position well secured, how do we intend to manage our trading decisions for today on the US All Spot? Now, looking at the current market structure here, since the beginning of this week, it is quite obvious that price action has been very, very bullish. And to further emphasize this, remember we identified an ascending trend line during the second day of this week after connecting the series of higher lows since the beginning, since last week Thursday in this particular market. And with an ascending trend line here, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we of course want to be looking out for structures and patterns that will support the idea of buying that asset. Now, with the situation we have on the US All Spot this morning, it is quite clear that price still remains above the ascending trend line, hence we want to feel comfortable in our buy position while we also look out for more opportunities to buy. Now, with the situation we have here, remember I laid emphasis on the fundamental aspect of the market too as well. As we can see, price action is gradually approaching the $80 mark target which the OPEC Plus market has placed on this market. Remember, since the beginning of the year, the OPEC Plus has been doing everything within its capacity to artificially increase the demand for oil, hereby aiming at that $80 mark. And in the last meetings and seminars they have been having so far this year, they have continued to cut oil production by millions and millions of barrels, decreasing the total global output by I think 5% of the global market's production. And of course, this has been yielding some result in favor of the Apex Plus members as price action is gradually approaching that $80 mark. Now, with the situation we have here, the question going into the New York session today is that will price action continue to find higher highs, breaking out of that new resistance level at the $79.70 level, which happens to be the highest point price action has gotten to for this week. So for those who have been profitable on the US also far this week, so you can afford to leverage on some of the profit you had made so far this week to test waters around the $79.70 level to capture an uptrend continuation. So in that regard, let's have a buy stop order anywhere above the $79.70 level to test waters and see if the buy position there will click. So ensure you have your stop losses, very, very important. Just right below the trend line seems most appropriate. A 40 to 45 pip stop loss seems okay at this point. So that is how we are going to be expecting to join any bullish momentum at this point in the market. So as long as price remain above the ascending trend line, we look out for more buying opportunity at the breakout retest of the 79.70 level. Now, for those who are yet to take a position on the US All Spot, that is, you are not profitable yet on this instrument, then I will be advising you to follow the technical expectation here. That is, a breakout of the 79.70 level happens first of all, then you scale down into the lower time frame, where we want to be looking out for a retest of structure to confirm that truly buyers are getting stronger. Then we can join a bullish move to the upside. And in fact, if price action comes back to retest, is likely going to be testing that ascending trend line before another wave will happen. So let's be on standby to be part of this bullish move when it finally happens. So we are only looking out for more buying opportunities at this juncture above the $79.70 level. Now, in as much as we're looking out for buying positions here, you know how we do it in this community. We also want to keep tabs with the sellers too as well. Now, what is it that is going to happen in this market that will make us want to start considering selling and negating the idea to buy the US All Spot? Well, if we look at the structure critically, you would notice that the $79.70 level had been a very strong selling niche at some point this week. Now, see how buyers have struggled as soon as price got into that area. We saw how sellers jumped in right here on Tuesday to negate all attempt by the buyers to break out of the structure. And since that moment, price have found it difficult to find even come close to that area. As you will see, yesterday's trading session, we saw how sellers, buyers were unable to get into that area. And since the beginning of today's trading session, we have seen a similar scenario where buyers keep on struggling. As you will see, price is yet to break the previous high. And with the situation here, it only gives us an insight into the presence of sellers around that $79.70 level. And with this consistent rejection of this level, we cannot ignore the potentials the sellers also have in this market, as the continued selling pressure here could incite a sell-off or profit-taking activity in this market. Now, what are we going to be looking at here for us to be part of a bearish move? Well, we already have an ascending trend line, of course, which has been supporting that bullish idea since last week Thursday. And for us to start considering selling for today, we would need that trend line to be breached. So if price action slices through that trend line, and if possible go to as far as breaking down the $79 level, then at this point we want to start considering selling. But remember, we are not going to be jumping into a sell position at this point, or just jumping right in with a sell stop order, as we will need a confirmation to happen before we join, as a breakdown of this trend line could still turn out to be a false breakdown. So we will really need price action to really give us that confidence to be part of a bearish move here. And of course, for us to look out for this confirmation, as soon as we witness the breakdown of the ascending trend line, we shall be scaling down into our lower time frames, such as the 5 minute, 10 or 15 minutes time frame, to look out for signs that buyers are finding it difficult to climb back above that ascending trend line. And of course, this would reflect on the chart as either a retest of the $79 level or the ascending trend line. But most importantly, we want to start seeing continued selling pressure before we can join that bearish move to the downside. So if we are going to be considering selling the US All Spot today, we want to see the breakdown retest of that ascending trend line for us to join that bearish move to the downside. Now, for those who are profitable so far this week on the US All Spot, you can as well have your sell stop order anywhere below the ascending trend line to test waters and of course risk some of the profit we had made so far this week, to test waters and see if the sell position will continue to the downside when it breaks down that ascending trend line. So this is how we are going to be managing our positions on the US All Spot for today. So let's keep this in mind. Mark these levels out on your chart, as you will definitely be needing them as a reference point to guide your trading activity for today. So if you have any questions regarding my explanations and illustrations so far, feel free to let me know in the comment section. Trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the comment section and see if there are any questions. You can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activity. All right, everyone, in the absence of no questions, I want to assume that we are all on the same page. So in that regard, we shall be moving right into the next instrument on our watch list for today. So the next instrument on our watch list for today is the USTech100, which is popularly known as the NASDAQ. It has been a very, very profitable week, as we have been buying this instrument since the beginning of the week. Now, let's run through the expectations in this market and what actually led into the idea of buying this financial asset for this week. Now, if you recall vividly, at the beginning of the week, it was more of an indecisive phase in this market, as majority of participants in the market were anticipating the Fed's announcement. And as a result of this anticipation, we saw how price was ranging. Initially, it was ranging between the 15,450 zone and the 15,410 before that consolidation phase widened a little further into the 15,480 and of course the 15,410 area to give us a further insight into how strong the market is anticipating the Fed's announcement. Then in addition to that one, we had a couple of trend lines, of course, which has been guiding the bullish momentum. And in fact, we had our first buy position triggered when price action broke out of the 15,450. And we kept on adding more position. As you will see, price break out of the 15,480, breaks down of the 15,510, as we rode that move all the way into that key level before that bearish momentum began on Tuesday stroke Wednesday's trading session. Now, during our live session yesterday, we had this level marked out as an area where if price breaks down that structure, we'll definitely want to be looking out for buying opportunity around the zone, which of course happened. And if you had positioned yourself to capture this move, you would have been in position right now of about, let's see how many pips that is. That's about 250 pips in profit. And if you had also taken advantage of the breakout of that key level at the 15,600, it will be giving us another 95 pips to add on the previous position. And for those who have been part of this bullish opportunity in this market, well done to you for being on standby to catch this move. And if you still have a buy position running at this point, then I would tell you it is high time you moved your stop losses to secure this current position. And the most appropriate area I assume you want to be moving your stop loss to is that entry zone above or around the $15,600 mark. So now with a well secured position at this point, what is going to be our next line of action? Now, our next line of action right now is to try to see how a price action is looking like on the higher time frame so that we can have an holistic perspective into what is really going on in this market. Now, the first thing I did here was to scale up into the 4 hours time frame. And if you look at the structure, let's refresh our memories as to what we saw here at the beginning of the week. Now, if you look at the structure closely, taking into consideration the nature of price action since the beginning of the month of May, you will see that price action has been very bullish. And in fact, to emphasize the strength of the buyers here, we had a couple of ascending trend lines to help us guide our trading activity. Now, the key one is this one right here. After the deviation from that a major one, we saw this other one with the lighter one on your screen. I'm just highlighting that now, which has of course been a major determinant of this bullish momentum for the last couple of months. And at the beginning of this week, we saw our price action spent a lot of time around that ascending trend line. So let me zoom right in so that we can see things clearly. So you will see that most of trading activities at the beginning of the week has been more of rejecting that structure as sellers tried as much as possible to slice through that ascending trend line, but all attempts failed, favoring the buyers potential in this particular market. And of course, we will continue to hold on to a bullish bias as long as price action remained above that zone. So right now the situation is becoming very interesting as we finally saw the breakout of the 15,600. Now remember, yesterday I told us all how this level will be a major determinant of price action going into yesterday's trading session. And one of the things I made mention here is how this level, since it was broken during Thursday last week's trading session, price has remained below that structure, and every attempt by the buyers to break through has been met with strong resistance from the sellers, as you will see. And in fact, during this week on Tuesday, we saw our sellers negated the bullish attempt, and not until the early hours of today that we have witnessed the breakout of the 15,600, giving us a sign that all the sell positions along the 15,600 appear to have been taken out at this juncture. So for those who took advantage of this breakout, well done to you for being on standby to catch that move. Now, for those who had missed out on this opportunity, well, at this juncture, I will be advising you to exercise some patience, and let's see if the market will give us a second chance to be part of this uptrend continuation. Now, one of the things we are going to be looking at to be part of an uptrend continuation here, if the market permits, is that since we already have a breakout of a key significant level, such as the 15,600, we are likely going to see price action come back to retest that structure. So it could come to as far as the 15,600 or a sharp rejection of that ascending trend line to incite another wave of bullish momentum. Now look at how that ascending trend line also shares a confluence with that 15,600. So there is still a chance we could have price retrace back into that zone, and if it does, don't let us panic, as we still have a bus stop to look out for more buying opportunities in this particular market. So this trend line here and the 15,600 will be our yardstick that will be guiding trading activities for today. So let's see how this will play out in the next couple of hours. If price comes back, let's be on standby to capitalize on that move. Then another level is situated here, which can be used to maximize the potential of this uptrend continuation, and that is the 15,720 level, which we shall be marking out on our chart right now. So we have the 15,720 level, where a breakout retest of this structure as well will be welcoming more additional buy position to our existing trade. Now let's see if the market will break out that structure, and if it does, we want to be on standby to catch that move. Now, in as much as we look out for buying opportunities, you know how we do it in this community. We always want to keep tabs with the opposite direction too as well. Now, if we are going to be considering selling, what is it that will make us start considering selling and negating the idea of buying the USTech100? Now, since we already have an ascending trend line, which was spotted on the higher time frame, we will need price to slice through that ascending trend line to give us an opportunity to sell. So a breakdown of 5,600 and a descent and ascending trend line retest of structure should be welcoming selling opportunities in this market. And if price breaks down, retest, and price continues to drop, then remember that we also have a confluence at that major ascending trend line and a 15,300 level, where we shall be looking out to see how the market will be reacting to that level to determine if we are going to be adding more sell position, that is, if price breaks down that structure, or we are going to be getting ready for another wave of bullish momentum if we sight a reversal patterns around that area. So let's keep this in mind, mark these levels out on our chart, and let's see if the market will continue to the upside or not. If you have any questions regarding what I've just explained so far, feel free to let me know in the comment section, as I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument on our watch list. All right, everyone. So in the absence of no questions, I want to assume that we are on the same page here. So we shall be moving right into the next instrument on our watch list for today. So the next instrument on our watch list for today is the GBPUSD USD. Finally, this morning, I was able to hit my TP target at the 1.29700 level with over 5 positions running, giving us over 300 pips in profit on that single move. So we have been buying the GBPUSD, and for those who are part of this profitable journey, well done to you for being on standby to catch this move, and in fact being able to stay in that trade till this present moment is quite a phenomenal character you want to keep in the financial market, in the financial business. Now, with the situation we have here, I want to first of all share with us all how the week started for us, as this will give us a background knowledge of where we are coming from. And of course, you can use the information as an educational guide into understanding how to use price action to identify trading opportunities. So at the beginning of the week here, we had this range which was situated between the 1.287 and of course the 1.2849, where price action was confined at least for the first 10 to 12 hours, giving us a clue into the level of indecision at that point in time. And you know how we do it in this community. When price action falls into such a flat channel, we want to wait for either a breakout or breakdown of that range for an opportunity to trade. Now, with this situation here, we had a couple of sell positions initially at the beginning of the week when price action broke down, in fact retested that support line at the 1.28490 level. And one thing about it is that price moved about, how many pips was that? About 40 pips in our direction before we were taken out of that position. And if you had moved your stop loss accordingly, as we always do in this community, you must have been taken out with a modest size of profit, or at a worst case scenario, break even. Now, on Tuesday stroke Wednesday's trading session, we begin to see something interesting gradually unfold in this market structure. And one of the things we noticed here is that despite the fact that price action started the week on a strong bearish note, we saw how it became difficult for sellers to break through the 1.282 to give us a signal that this area could be a platform for another wave of bullish momentum. So we saw what happened here last week Friday, where as soon as sellers got into this area, their attempt failed at every point in time. As you see, buyers come in to negate that potential. We saw the same thing also happen at the beginning of the week. We saw what happened right here during the later part of the New York session, and we saw another buy pressure around this area on Tuesday's trading session to further emphasize the strength of the buyers around this area. And when we notice this, we begin to get ready to be part of a bullish move by getting ourselves strategically positioned just right above that key level at the 1.28400 area. And remember, I mentioned that we should definitely have our stop losses anywhere below this demand zone so that we can give enough room for price action to breathe. And since that moment, we had buy position triggered, and we continue to add more positions at the breakout of levels that we identified on this chart. We had one at the 1.28490, we had one at the 1.287, and of course we added another one at the 1.290 level during yesterday's trading session, and of course we also added more at the 1.29270 level. So it was quite a profitable trade for everyone in this community here. And for those who still have a buy position, some of us will still have a position running. Well, I'm of the opinion that you indeed want to be moving all stop losses to secure this current buy position if you are still in one. And I'm of the opinion that anywhere below that ascending trend line, that's between the 1.296 and the 1.29350, seems most appropriate to secure any buy position here, as we of course want to give enough room for price action to breathe. Now, with this well secured position at this point, what is going to be our next line of action for today? Well, it is quite obvious that price action has been bullish since the beginning of the week. And in fact, while I was trying to decipher what is likely going to be happening today, I was able to spot and connect the series of ascending of the pivot lows here to give us an ascending trend line to work with for today's trading session. And you know how we do it in this community. Whenever we have ascending trend lines such as this, all we want to be doing is to feel comfortable feel comfortable in our buy position as long as price action remains above that ascending trend line, and of course look out for potential opportunities to maximize that move all the way to the upside. So in that regard, I position myself above the 1.29550 to capitalize on that uptrend continuation, and this is for those who are already profitable so far this week. So with that in mind, I was able to leverage on the profit I had made so far this week to test waters around that 1.295. So we placed a buy stop order there, and the position has been triggered, and it is currently running in a loss of about 10 pips at this point. Now, for those who are taking this position for the first time, well, it is reasonable to wait for a breakout retest before we can join a bullish move, and it appears we already have a breakout. Then you could by now get ready to join a bullish move if price action climbs back above the 1.295. So as long as price remains above these levels, we want to feel comfortable in our buy positions, while we also look out for more opportunities to buy the GBPUSD. Now, in as much as we're looking out for buying potential in this particular market, we cannot ignore the potential sellers also have at this juncture in the market. Now, if we are going to be considering selling, well, you know how we do it. We want to see price action break down that ascending trend line before we can now start considering selling. Now, remember, we are not going to be getting too excited, as a breakdown of that structure could still turn out to be a false breakdown. So we will need a significant confirmation that assures us that sellers are gradually gaining momentum, and in fact that buyers are finding it difficult to climb back above that ascending trend line. Now, one of the things we are going to be doing as soon as we notice the breakdown of the ascending trend line is for us to scale down into a much more lower time frame. So we can go to as far as our 5 minutes, 10 minutes, and even 15 minutes time frame to look out for signs that buyers are finding it difficult to climb back above the ascending trend line. And of course, this would reflect on the chart as a retest of this trend line, continued selling pressure, then we can join a bearish move to the downside. I doubt if this is going to happen, but if it does happen, we want to be on standby to catch that move. And in fact, we have levels such as the 1.29270, where a breakdown retest will also welcome selling opportunities in this market. So let's see how this will play out in the next 24 hours. And trust me, we shall be back here tomorrow to review how well this price is doing and how we can anticipate tomorrow's trading session. So on this one, I still remain very bullish as long as price remains above that ascending trend line we just identified on the chart. So you want to be marking out these levels so that you can be able to use them as a reference point when you're about to make your independent decision on this asset. If you have any questions as regards to the current setup I just shared with you, feel free to let me know in the comment section. And before I round off on the GBPUSD, I also want to refresh our memories on what is going on the higher time frame, and for the sake of those who are not part of our live session at the beginning of the week, to see what is going on from an holistic point of view. And I think with that information in mind, this whole setup will make quite a whole lot of sense. Now, at the beginning of the week, if you recall vividly, you will see that we noticed that price action has been bullish since the month of June, and in fact we had a couple of trend lines. But the most important trend line here is this one right here, which has been capturing this bullish momentum since the beginning of the month of June. As you will see, this trend line has consistently been respected by the price action. Now, at the beginning of the week, we had a key level along the 1.28400 area, which of course has been a major determinant of price action. So we went to as far back as the month of June to see how significant that level is. We saw selling pressure here. We saw the same selling pressure around this area before that level was finally broken at the beginning of this month. And you know, from a technical standpoint, when price action breaks out of a key structure just as the 1.2840 level, as you will see here, we expect that price at some point will come back to retest that structure. And one interesting thing about that retest of the structure here is the fact that as soon as price got into this area, we have continued to see buy pressure spring out from that zone, which further gave us the confidence to be part of this strong bullish move that we have been witnessing since the beginning of the week. Now, another interesting thing about the structure is the fact that the 1.284, which was the key level for the week, also shares a beautiful confluence with that ascending trend line we identified earlier, hereby giving us a situation here where price action respected the ascending trend line one more time to incite an uptrend continuation. Now, the question at this juncture on the market is, how far will this bullish momentum go? Is it going to get to as far as the peak here at the 1.314, or is it going to find a lower high to incite a sell-off in this market? Now, with the situation we have right here, we are at a critical point. Now, if I bring out my line chart, there is a structure here I would like to share with you, and that falls along the 1.300 level, a very, very strong psychological area, considering the round figure of that price. Now we have the, I'm sorry about that. So I want to label this one as the 1.300 level, which of course we want to see how the market is going to react to this level to decide if we are going to be adding more buy positions to our existing trade or getting ready to sell if continued selling pressure resumes around that area. Now look at what has happened here in the last 3 to 4 hours. We have seen price action come into that level. In fact, we have seen selling pressure resume around that area. We are really at a critical point in the market. So if selling pressure persists below the 1.3100 level, then we might likely going to be seeing a sell-off in this market. But if price breaks out of the 1.3, then this will be a good opportunity to add more position to our existing buy position. So this is how we are going to be managing this trade for today. So the 1.300 level is another area to look out for trading opportunities today. So let's scale back down into the 1 hour time frame. So right now we have a situation where sellers are still dictating the pace based on the last 2 candles here. And so if this persists and continues, then a breakdown of the ascending trend line will be that signal we are waiting for to join a bearish move. So let's be on standby to capture that opportunity when it finally happens. So these are my views here on the GBPUSD. So let's see how the market will play out and be on standby to capture that move when it finally happens. So mark out those levels on your chart. You will be needing them to guide your trading activity for today. So if you have any questions regarding my explanations here, feel free to let me know in the comment section. So I will be moving on to the last instrument on our watch list for today, because I'm already running out of time, so that I can be able to take you through what my expectation is going to be like on this asset. So the next instrument on our watch list is the XAUUSD, which is always my favorite right here. So on the XAUUSD, what do we have here? So we have actually been buying the XAUUSD since the beginning of the week, giving us multiple entries to capitalize on a bullish move. But before we even got to the idea of buying, remember, we had a very, very strong indecisive phase, which was characterized during the first half of the week. Remember, we identified a range where price was initially caught within the $1,962.50 level and the $1,958 area to give us an insight into the level of indecision at that point. And remember what I said at the beginning of the week, that as long as price action remains above our key level and that 1,958 zone, we'll continue to consider buying the XAUUSD, and that the only condition or criteria that will make us want to sell the XAUUSD is for price to slice through that demand zone. And if you recall vividly, I said we are not jumping right in, as we will need confirmations to happen before we join a bearish move. And we of course identified a sell window around this area yesterday, where we said a continued selling pressure right here is likely going to be inciting a bearish move. Then in addition to that sell window, also we had this descending trend line, which of course we said price remaining below this trend line will make us feel comfortable in our sell position, and that if price breaks out of that descending trend line, and that point we will start considering buying the XAUUSD. Now look at what happened here during the New York session yesterday. We saw continued selling pressure. In fact, price moved to the downside here, about 60-70 pips in our favor before it came back into entry point. And of course, if you had moved your stop losses accordingly, you would have been taken out with a modest size of profit, or at a worst case scenario, break even. Now, something interesting happened here yesterday when we were monitoring this current market structure. Okay, I think it was on Tuesday, we said something here that if this buy pressure, we saw that even though we had the breakdown of the demand zone, we saw how the 1954 became a new platform for buying opportunities, as we saw sellers finding it difficult to slice through that structure. In fact, on Tuesday's New York session, we saw a couple of sharp rejection of this area, which further emphasized the presence of the buyers. And you know what we said, that a breakout of that descending trend line, retest of it, will confirm an opportunity to buy. And look at what happened here on Tuesday. We saw the breakout happen. Price came back to retest the 1962, and since that moment we have been buying the XAUUSD rather than the move all the way to the upside. So for those who are part of this profitable journey, well done, and kudos to you for being on standby to buy and still stay in the position. So if you still have a buy position running, you of course want to be moving all stop losses to secure the current buy position. And the most appropriate area, I think, we have a new chart which I shared yesterday. I'm not sure if it's with this forum. I shared this. I think it's this forum, of course. So we had this new chart that we said we were going to be using to guide our trading activity. So for those who still have a buy position running, you want to be moving all stop losses to secure this position. So I'm of the opinion that anywhere below the 1975 and the 1973 seems most appropriate to lock in this position, as of course we need to give room for price action to breathe. Now, with this situation here right now, how do we intend to manage this position, a trade on the XAUUSD today? Well, the first thing we want to acknowledge here is the fact that price action has been very, very bullish since the beginning of the week. And in fact, to emphasize that, we have this ascending trend line after connecting the series of higher lows. Now, with the situation here, as long as price remains above the ascending trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to capitalize on a potential uptrend continuation. But something interesting has been going on in this market in the last how many hours now? 9 to 10 hours now, as you will notice that as soon as price got into the 1980 zone, we begin to see how buyers struggle around that area, giving us an insight into the presence of sellers at this juncture. And with this situation here, we cannot ignore the potentials of sellers, as the persistent selling pressure here could lead into a scenario where price will be breaking down that ascending trend line. And for us to sell at this juncture, and if this whole pattern here turns out to be a reversal pattern, we are likely going to be seeing a breakdown of that ascending trend line. And if this ascending trend line breaks down, then at this point we want to start considering selling the XAUUSD. And one interesting thing about the breakdown here is that we have a level at the 1975, which of course we are going to be using to guide this bearish move. So we want to see a breakdown of the structure, scale down to your lower time frame where we want to look out for a retest of this level to give us an opportunity to join the bearish momentum to the downside. So let's keep this in mind. We are only selling if price action breaks down and retests the 1,975 level. Then if price continues to drop, then we have the privilege of adding more positions at the breakdown of structures like the 1,973, 1,971.50 to maximize the potential of this bearish move. However, a bullish expectation is still very possible, and we still have a buy expectation on the table, so we are not going to ignore that potential, but for the fact that price still remains above our ascending trend line. Now, if we are going to be joining any bullish momentum at this point in time, we would need price to slice through the resistance line at the 1,980. And in fact, if you had been with us here in this community since the beginning of the year, you can do your research on this one. The 1,980 has been a major determinant of price action if you go to as far back as 2 to 3 years on the XAUUSD. And one thing about this structure is that if selling pressure is found around this level, the high chance of price dropping to the downside is high. And if buy pressure is identified around this area, the high chance of price action to move to the upside very strongly is also on the high side. Now, for us to buy the XAUUSD, we would need price to take out all the sell positions at the 1,980 to feel confident of joining any bullish move at this point in time. And if you are a cautious trader, you might want to wait for a retest of structure to happen as a confirmation to be part of a bullish move. But one thing for sure here is that if price remains above the ascending trend line, we shall feel comfortable. And in fact, the 1,980 also has something to do with the ascending trend line, where a retest will give us a very beautiful confirmation to be part of an uptrend continuation. So let's see how the market will play out. It's a simple setup we have here on the XAUUSD for today. So we have the 1,980 to help us guide buying opportunities in this market, and we have the 1,975 and of course the ascending trend line here to help us guide any bearish move if price action breaks down both structures. So this is what we have here on the XAUUSD today. Simple setup. You want to mark these levels out on your chart, as you will be needing them to guide your trading activity for today. So let's see if there's going to be any questions. So I will just hold on for the next 10 to 15 seconds, after which I will be drawing the curtain for today. I see your comment, Jack Racentis. How are you doing this morning? 3570, your emojis. I'm not sure I understand what you mean by that emoji there. Ilana Atta, how are you? Glad to have you around. Satria Muda, hi. Thank you for checking in on us. I see your comment, Amir Sufian. All right, guys, I'm of the opinion that there are no questions. So in the absence of no questions, I want to assume that we are all on the same page. And I do hope you have marked out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So it has been a wonderful moment with you guys today. We were able to take on 4 financial assets: the USOILSPOT, XAUUSD, the GBPUSD, and of course the USTech100, where we were able to identify and simulate potential trading opportunities that will come up during the New York session. So all we just need to do is, since we already have these levels marked out, we want to wait for structures to mature, then jump into that position. So on this note, I want to wish you all the best of luck during the New York session today. And for those who are joining us for the first time, I didn't forget you guys. I hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, don't hesitate to join us again tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this financial asset has been doing so far, and of course get ready for the last trading day of the week, of this week. I wish you best of luck, and I wish you a wonderful and beautiful evening, everyone. Bye-bye.